Welcome to more broadly to the fiscal group and also the Clean Energy Finance Corporation. I'd invite either to make an opening statement if you'd so choose.
No, we don't.
No, okay, thank you. So Senator Wong.
Can you tell me to date some of the, where are you at in terms of what you've lent, how much private sector financing you've leveraged? You know, can you give us an update about the work of the CEFC to date?
Certainly. Gillian Broadbent, Chair of the Clean Energy Finance Corporation. We have invested $536 million. That's been matched 3 to 1 with private sector funds. So it's resulted in $2 billion capital investment in the sector.
$2 billion.
$2 billion worth of capital expenditure in the sector. Because with every $1 we invest, we've mobilised $3 of private sector funds. We've comfortably covered the government's cost of funds and our own operating costs, and so that's we're earning about 3 to 4% over the government bond rate.
So is that, you know, more or less? Are you on track? Have you been more successful than had been anticipated?
Well, we've been very encouraged by the market response to this, both those in the industry and those in the finance sector. It's, I think what we've found, and I'll get the CEO to comment on this, but we've found there really is an appetite for progressing emissions reduction, but it does need an advocate, and it needs an encouragement to get on with the job, because the market's been very immobilised by the lack of bipartisan policy in this space. So I think, someone in the industry said to me there's been more investment in this sector in the last 6 months than there'd been in the last 2 years, and that's why we're earning a return on the government's cost of funds. So it's not so much that the industry's looking for a handout, it's just looking for almost an advocate who says, come on, get on with it. That message hasn't been, because it hasn't been a bipartisan message, I think it's just, that's why we've been effective. But Oliver, have you got...
Sure.
Yeah, and Mr Hertz, can you also perhaps focus in your remarks, include a discussion about rates of return? And
sure.
I'd appreciate that. Thank you.
Thank you, Senator. Oliver Yates, I'm the CEO of the Clean Energy Finance Corporation. As Gillian was saying, we have been able to deploy effectively about $500 million worth of capital, and that has drawn in an additional $1.5 billion into the sector. The average cost of government money that we use, because in essence we look at ourselves a bit like a bank, we look at the government's cost of funds and our benchmark, and the government's cost, which we benchmark ourselves against, is approximately the 5-year rate. And that's around 3.5%, and as indicated in our annual report, the average yield which we're lending out to people is approximately 7.3. So the taxpayers are earning a solid return. More importantly, when it comes around to some of our activities...
Well, so can I pause on that point just before you go on, if you don't mind? So essentially, taxpayers are gaining a significant return over and above what the cost of your funds are, which is the cost of debt for the investment you're making.
That's right, Senator.
And that's consistent with your investment mandate?
Yeah, it is consistent with our investment mandate. We were set up in our investment mandate, had a very important word in it, Senator, which was a word of that we were to become a sustainable institution. And a sustainable institution, as far as the board was concerned, meant that we did not need ongoing taxpayer funding year after year, and that we would sustainably operate as an entity that would cover its own costs and be able to achieve a public policy purpose. So as you would appreciate, the banking market is a very profitable business. The banks this year made approximately $27 billion. We are in essence a participant in that market, and we are benefiting, and the taxpayer is benefiting from participating in the market. But importantly, in relation to this, Senator, is that we actually provide targeted monetary policy. So when the government normally wants to encourage activity in one sector, it uses a very broad tool such as overall interest rates. By having an organisation such as the CEFC, we're able to deliver a targeted monetary policy to the clean energy sector, including those people who want to take action to reduce emissions and become more efficient, we can ensure that they have access to capital efficiently and at a lower cost.
I interrupted you. You were going through.
Yeah, I was going to talk about some of the other benefits that we provide, and obviously one of them is just overall abatement. So in terms of the projects that we've done so far, they actually achieve emission reductions of approximately 4 million tonnes per annum. So that's, in relation to the government's challenge, that already constitutes about 3% of the government's challenge in terms of meeting its negative 5% baseline.
So what's the price per tonne of abatement then?
Well, our price per tonne is actually negative $2.40. And the reason it's negative is that when we lend, we earn a profit on that lending activity. And as a result of lending to corporations, they use that money to become more efficient by reducing their energy costs. And by reducing the energy usage, they actually reduce emissions. So it works very well that we lend, the taxpayer receives a return because we're running profitably on that money. The company receives a better return because they're actually becoming more efficient.
So can you do that in layperson's language for the taxpayer?
Yeah. So the
how much is the taxpayer paying? Or
well, it's actually earning for people to reduce emissions.
Exactly. So for I understood that, but I just want to make sure we put it very clearly. The taxpayer is getting the benefit of reduction in carbon dioxide and is actually making a profit from that through your process, as opposed to having to pay someone. Is that?
We talk about it as a negative cost.
I know, but no one else. Not many
positive
people understand
return.
that.
Right. So instead of paying something, when you do a reverse auction, you might say we're taking the lowest price.
Yeah.
We move into the positive price. So for every tonne of emissions that we've managed to encourage to be achieved, it has a return to the government of $2.40 per tonne.
So the taxpayers are actually gaining money from reducing emissions.
They have an earning from that reduction. But I think what's...
How's that returned to the taxpayers?
It's returned to the taxpayers by accumulating returns in the Clean Energy Finance Corporation, and the Act was drafted such that returns to the Clean Energy Finance Corporation got directed into the Australian Renewable Energy Agency, so it was to be paid in dividends to ARENA. So it was going to be
budget onto the
it's the budget.
Yes, in a sense, it saved the budget paying money into ARENA.
And I presume that hasn't happened yet.
No, it hasn't happened yet.
Is it that anticipated to happen?
We've only been going for 6 months.
Anticipated to happen at any time in the near future?
If we were
well, they're still operating at the moment. Do you foresee any plans to actually return any?
If we continue at the pace of investment, we certainly would be paying dividends to
when?
ARENA.
Did you have any projections of when?
Our projections were 2015. At the end of 2015,
and what quantum what sort of range of quantum at that point?
Well, you are entitled to take it on notice, Ms. Philbin, if you'd like. If you're not able to give direct.
We did do some estimates on that.
We'll take that on. I'm happy to take that on.
Yeah.
Sure.
That's fine.
All right.
Sorry.
No, I'm just, you're not a public servant, so I wanted to make sure that she was aware of the...
Yes, well, we would be happy to come back to you on that, because we've certainly done some estimates of where we'd be, because in our forward...
So the best indication of that is the underlying cash balance forecast, which actually shows that the government would actually lose $80 million over the forward estimates period by closing the CEFC down before we even get to any of the closed down costs of staff costs and everything else. So,
and is that predicated on the current rate of return or what was projected, because you're above that?
That's a good point.
Yeah.
Who's it?
Senator Andrew Howe, Chief Financial Officer of the Clean Energy Finance Corporation. In relation to those estimates, they are based on what was done at PFO. We've actually been outperforming against those PFO estimates, so the 80 million is a conservative number. It's also only dealing with the forward estimate period before we get to critical mass.
Sure.
So
you're still ramping up at that.
Correct.
What were the PFO? Is it disclosed, the rate of return that PFO is predicated upon?
It is not disclosed as an individual line item, Senator.
Can you tell me?
We were looking at a spread of really between 1 and 1.5%, and on equity we were assuming a zero return. So we're actually performing
And you're at
significantly better.
7.3 above 3 to 3.5.
Yeah, so it's
So
about
what-
400 points, 300 or 400 points,
Okay.
which, Senator, would be normal for banking activity, and that is logical because, as you know, the Clean Energy Finance Corporation has, as one of its tools, we are able to use concessionality. So it says we are able to lend below market rates where we believe there is a real positive dividend to be obtained by the taxpayer or for the nation as a result of doing that. And out of the $300 million allocation we've had this year, I don't think we've used anything more than $14 million. And by that $14 million, just to be 100% certain everybody understands, that is not actually a cost. That's a measurement that we're still lending well above the government's cost of funds, but for accounting purposes, we might be a little bit below the deemed market rate.
Okay. Can I just ask, because I'm conscious other people want to ask questions. First, you said 536 million leveraging a total of 2 billion, so 3 to 1. How many projects or how many?
Well, at the moment there's been 11 investments made by the CEFC.
Okay.
In addition, we benefit from years of work that has been spent, which was originally started as the Carbon Trust and then became low carbon. So we have a good track record and a solid understanding of what it needs.
Yeah,
what
I
we
was
need
just trying to
do.
work out what the 536...
There's 47 projects in total.
47 projects.
Yeah, 47 projects in total.
Okay, thank you.
Senator, if I can add that some of the facilities we've set up have been specifically directed to small and medium enterprises.
I was going to ask about that. Do any of them include SMEs?
Yes,
Where
well,
you go?
within the 536 million, there are facilities set up with co-financiers, some of the major trading banks or the energy retailers, to facilitate their support for energy efficiency across the small and medium customers that we wouldn't have access to, or it's not economic for us to consider smaller transactions, but they have an interface with those companies every day. And one of the objectives of the CEFC that we've been very conscious of is not just covering our costs and being financially self-sufficient, but trying to develop the financing market for energy efficiency. And while, as I said, there is an appetite to do so, it does need an advocate, and you have to use partners to do that. And the co-financiers are very good in that way because they have a much wider reach to customers who'd be prepared to adopt these programs. And every investment that we make and every project that progresses does bring us down the cost curve for a replica project because there are learnings and even the financiers feel more comfortable with it.
So what sort of partners are you talking about? Can you just...
We're talking about the major trading banks, the Commonwealth
Right.
Bank, the ANZ,
Okay.
with Origin in terms of dealing with their retail customers.
So, Senator, I think that's a very important point, that in relation to most of the loans that we make them in conjunction with the major trading banks, who may be in most cases are at taking exactly the same risk profile as the CEFC. Sometimes they don't, but in most cases we are a catalyst and we bring them to the transaction, and we hope that they participate equally alongside us. That's our core job, is to enable people to move transactions forward and then attract capital to get the deals done.
And in terms of your experience through this process of engaging with SMEs, what do you think the hurdles would be for them for participating, for example, in a reverse auction type process?
It's hard to see small, medium enterprising entering into there are a lot of upfront costs in participating in a reverse auction process, so it's going to be far easier for larger corporations to do that than small and medium enterprises. They don't tend to... They need someone holding their hand, and in some ways, not with the really small companies, but with the medium-sized companies, we've been an advocate and a hand holder in working with them to get the banks to support them in financing transactions. But when you get down to smaller companies, that's much harder for them to think about even approaching us to do that.
Okay. I think Senator Ludlam...
Chair, could I just wanted to add to something that Mr Yates said, and that is that the explanatory memorandum for the Clean Energy Finance Corporation Abolition Bill includes the financial impact of abolishing the CEFC, which, as Mr Yates said, the impact on the UCB here is $82.1 million negative across the forwards And then below that, it says these estimates do not make an allowance for the costs of shutting down the CFC, such as employee redundancies and contract termination costs, nor do they make any allowance for the lower public debt interest costs. I think that last bit is quite important.
Senator Ludlam.
Thanks. I'll carry on in a similar vein. So where would we find approximate estimates of what those additional costs are likely to be?
So additional costs, well,
Of what?
Of closure, your wind-up costs, your staff entitlements.
I think we've got an indication there.
At this stage, we have not been requested by Treasury to do those estimates. Certainly at a board level, we do make sure we understand what liabilities are being incurred by the corporation that would have to be incurred in the event of a wind-up. So at the moment, we have back-of-the-envelope estimates only, and they are somewhat confidential because they do affect staff and what that means in terms of timing.
Okay, you can't table the envelope. Okay. Just to come back to where Senator Wong was, because there was...
Senator
yeah, go ahead.
Ludlam, it would be one of the first things that we looked at were once the bill received royal assent.
Yeah, well, we'll see how that goes, right?
Yeah.
The
Should
dividends
the Parliament pass it? Okay.
Beg your pardon?
Should the Parliament pass it?
Yeah,
accept it.
and there's no guarantee that it will, but by the time that it does,
that's a
you
matter
will
for
know.
the Parliament.
Okay. I'm not clear. The dividends that you were expecting to pay back by 2015, are they completely hypothecated into ARENA, or do they just go back into general revenue?
They're streamed into AREMA. We haven't put too much thought into that because we've been busy building up our investment portfolio and managing our own costs and our commercial practices. But from my... Nigel might...
Yes. The way the accounting works is the interest that the CEFC earns comes to us, it goes back into the CEFC special account.
So what's the tie-up with ARENA then?
So the Minister, to the extent there are surpluses, can ask from time to time for
Okay.
those surpluses to be provided to
That's
ARENA.
right.
Because ARENA is depleting a finite pool of capital, isn't it? It's not expected to make a return in the same way as you are.
No, and that's a very, very fundamental point, is that we aren't a grants organisation, and we believe very strongly in the discipline of debt, as we call it. As we do think that people who and participants who borrow money are going to be very cautious about applying that money to achieve the objective that they set out to achieve, whereas in certain circumstances, grant programs, because there is no obligation to pay the money back, may not involve the same level of we can't say the word responsibility, but the same level of requirements as what would be happening to loan borrowers who have a long-term obligation to continue to pay that loan off back to us.
I take your point. Of the roughly 3-to-1 ratio, as far as I can tell, of private capital that you've mobilised, do you have a rough idea of how much of that is domestic and how much of it's foreign investment?
That's an interesting question. I can take it on notice, but it was encouraging through this in syndicating some of these transactions that we have had 3 totally new foreign financial corporations coming in to participate, and they were out of China and Singapore, and I think they felt a certain encouragement to enter because there was a government-owned financier at the table.
I'm sure. So it's a confidence-building measure apart from anything else.
Correct.
Yeah.
Yeah. Okay. I hope you're taking notes, Senator Sendenis.
I've got my pen poised, Senator
Excellent.
Ludlam.
So what happens because you're able to borrow at lower than the market rate, and that I guess is what gives you your advantage, as well as the fact that presumably your specialty will be in assessing risk in renewable energy projects, which doesn't exist in the commercial banks. What would happen if you disappear from the landscape? Because I'm presuming the government is going to make an argument that you're unnecessary, that the market will deliver. But just spell out for us what happens if you disappear.
Well, I can only say we probably go back to where we were. As I mentioned, someone in the industry said there's been more capital investment in this sector since we've been going than before we were there, so I'm only assuming we go back to what it was before we were there.
Okay. So you've only been operating, you've only been signing cheques and assessing projects since 1 July?
Well, we've been assessing, Senator, we've been assessing projects for a longer period of time. We've actually only had the money to be able to release really since the beginning of July.
Okay.
But the impact of the shutdown of the CEFC would actually be quite broad at this stage. There is considerable uncertainty in the market, and the CEFC is playing a very active role in trying to enable people to continue to pursue transactions in an environment of uncertainty. So for many project participants, this will continue a trend which will probably see them not be able to finish projects that they would have liked to have finished.
Well, that's my real concern, I suppose. I don't completely understand how you are able to offer loans. I understand from your annual or from your report that there are 179 proposals for projects in the pipeline to an estimated total value of 14.9 billion. Stop me if these figures are unfamiliar.
No, they're correct.
What happens to those 179 projects if you disappear sometime in the next 6 months? How many of them will actually get built?
Well, naturally market forces will eventually take their shape, but the idea the CFC was set up to deal with market imperfections following about 3 years of work, and I guess the reason it was set up is it was felt that there was a real market imperfection here that needed to be fixed, and the CEFC was the mechanism to fix it. So by removing us, effectively the industry will go back to where it was before, and projects that may have been developed may be delayed, and in an environment where many economies around the world are now taking positive steps to move from a high carbon economy to a low carbon economy, potentially new industries that could have been built in Australia will not be built in Australia because they will find themselves falling behind other countries which are currently establishing institutions just like the CEFC. I mean, Bloomberg Energy Finance, I think, indicated that there's $58 billion been lent by equivalent agencies like the CEFC this year alone on the renewable energy sector, and about $109 billion in the energy efficiency sector. And countries from the UK, as you know, through to Japan, Malaysia, the US are all setting up similar institutions as they understand this transition is coming, and they want to position their own industry and their own economy to make the most of a transition and a change.
So that's a sector-wide view, and that's fairly dramatic. But what about the projects themselves? So the investments that you've made and the private capital that you've mobilised, is that enough to get all 179 of those projects built? Or if you disappear sometime in the next few months, what actually happens to that portfolio?
Senator, if I can just comment on that. One of the objectives of the CEFC was to develop the financial market for financing these transactions, not just sort of renewable energy, but energy efficiency, renewable energy and lower emissions. And both the employees and the board have been involved in a lot of financial market developments, and you just know they take a lot of time, and you've got to have very patient capital. And sometimes some of the private financial institutions don't have that patient capital and don't want to keep whole teams of people and build up the skills while they don't think anything's happening in the next 3 years. Right. So that's the danger of sort of discontinuity of public policy, in a sense, that you start building things and the market gets a bit of confidence and it starts thinking maybe we'll put people on and maybe these projects will proceed. And with those projects you do come down the cost curve because the constructors learn how to do it better, and it's starting something that then you stop, and exactly when it starts again through market forces could be quite a long time, but that's very hard to estimate. Okay. Can you explain for us, and forgive me if this is in your report, but can you explain for me the time frame of the projects? Are most of them in the distant future, or are some of them, like how many of those 179 in your portfolio are actually in construction phase?
Well, Senator, I think the best way to describe it is that in relation to the 11 projects that we funded, they are all funded and they will be expecting to go into, if they're not in construction, they will be going into construction within the next 12 months. So that's of the money, those ones that we have. In relation to the other projects within the pipeline, I mean, not all projects obviously within our pipeline are likely or are going to receive funding. We obviously are quite selective in terms of how we go about choosing projects. But at the moment, if I was looking at our pipeline, there's about 37 projects which are undergoing, reasonably detailed scrutiny that would involve about $2 billion, and that none of those are in construction at the moment because they don't have finance, and they will not enter, obviously, construction until such time as they have finance.
Well, how many of those projects are at risk, let's be blunt, if you disappear from the market?
I can't, precisely give you that figure.
Order of magnitude, half of them?
Well, it's not just...
I think it's a timing issue. It's this market development that when you've got the market developing and you're coming down the cost curve and you've got the banks participating, then they stop doing that. They might stop doing it. They'll certainly go a lot more slowly. Will they stop for a few years? It's very much a matter of the signals and the strategy set by government in both energy and environment policy. And I think they take the signs from that.
No, I understand. I feel as though we're having two related conversations. One of them is about the sector-wide impact, and it sounds very, very dramatic, that it really will throw the brakes on. But I'm also interested in the project-by-project dynamic, that you've got people lining up, or you're in the process of lining up and building that bridge, as you've kind of explained, between the proponent and the private capital.
Yes, well, while it's very hard, while we have been building that bridge and we've been very encouraged by what we've been able to achieve by establishing that bridge, it's also very hard. We didn't know when we started how receptive the market and the financiers would be to participating with us, and we've been very encouraged to find that receptivity, and how it will continue when we're not there, it's very hard to say, but we're certainly conscious that being an advocate and being a trusted financier with the project owners has been very effective.
Yeah.
And when you're not there, how much market development we've been able to achieve in our existence that is sustainable, it's hard to say.
It's hard to put a metric to, I guess. Well, I appreciate your candour. Following legal advice that you've received, I'm not asking for you to table a copy of it, but are you operating just as you would have without the hostility from government, or with, you've both observed up to now that lack of bipartisan consensus or cross-party consensus is problematic? Are you operating as you would otherwise have, or has this actually slowed or modified your activities?
No, we've had an open discussion with the government about this, and they've recognised our public responsibility and duties, and that we're going to continue investing the way we have. But just with the message that the market's getting about the interest in this sector, it's the market isn't so receptive as they were before, I suppose, both the co-financiers and the industry. So we're certainly consistent in everything we're doing, but it's a little bit more, the market itself is a little bit stepping back and reassessing, I suppose.
Understandable. So last one from me. Your Act provides $2 billion for you to commit each financial year. How much will be available to you in the months after the 1st of July 2014? Maybe if you could take that in two parts, how much of that $2 billion is committed, and what would be available to you post 1 July 2014?
Of the $2 billion, we have committed $536 million.
That was that figure at the outset, okay.
We have...
Excuse me, Chair, Gillian, I might just correct one thing there. Some of that $536 million actually came from Low Carbon Australia. So of the $2 billion, $482 million has actually been committed by the CEFC. Sorry, Gillian.
Thank you.
It's an extraordinary result.
It is.
Thank you.
So we have access to $2 billion per annum, and you said how much would be available?
I'm just interested in the 2014-15 financial year.
Oh, the 2014-15, then a further $2 billion would be available, because the design under the Act was that $2 billion per annum would be available for investment in this.
On the 1st of July?
In addition to any monies that are unspent and remain in the special account held by Treasury.
Do you have to have committed the $2 billion, or are you able to carry over?
We do not have to commit, Senator, the total $2 billion. In fact, in all of our forecasts, we were forecasting less than a $2 billion per annum commitment and less than a $2 billion per annum drawdown. The reality is it takes time in this market, and we are investing very prudently and making sure that the taxpayer is looked after here. So we don't want to just throw money at all investments. We are.
Does it carry over though?
It does carry over.
Thank you. Thanks, Heaps, Chair.
Now, I know that